So net profit has come in at 16,694 crore rupees, which compares with a poll of 15,053 crore rupees. So it is a number higher than what the CNBC TV18 poll was suggesting this time around. So looks good as far as the net profit is concerned. Even NII is a beat of around 1,000 crore rupees. NII has come in at 40,392 crore rupees, which is around 1,000 crore rupees higher than the CNBC TV18 poll. The stock has surged to the day's high, 591 on SBI right now. The poll had suggested that it'll be a higher number on a quarter-on-quarter basis, and net interest margins were expected to remain stable on a sequential basis. We did have some estimates coming in for the loan growth as well. Midcap had expected loan growth of 15.8% on a YY basis and 3.5% on a sequential basis. So we will just look at the loan growth as well. So far, on the NII front and the net profit front, SBI's numbers look better than what the street was working with. Just looking at the gross NPA as well, they have reduced on a sequential basis. Gross NPA has come in at 90,927 crore rupees, which compares with 98,000 crore rupees on a quarter-on-quarter basis. Gross NPA in terms of percentage has come in at 2.78% versus 3.14%. So yes, asset quality has improved as well on a sequential basis, and the numbers on NII and net profit are looking better than expected. Rima, you have any more numbers?
Net NPA has improved by nearly 10 basis points, 0.67%, which compares with 0.77%. So State Bank of India, a beat on profits, a beat on the net interest income, and a significant improvement seen on the asset quality. So ticking all the right boxes, at least in terms of the initial numbers. But, you know, Abhishek is here with us in the studio. Abhishek, how would you rate the numbers? Because even the rest of the banking pack has reported good numbers. So how would it stack up?
Fantastic numbers. Okay. They have gained market share in terms of the loan growth momentum. The PDF number that is there in the press release shows that loan growth is at 17% YOY and about 4.6% sequentially. Analysts like Phillip Capital were working with a loan growth of 15.8% YOY and about 3.5% sequentially. So it's a far better number. Now, the percentage might just look like 3.5 and 4.5, but in absolute value, it matters a lot for the bank of SBI size. And if you take a look, even their credit cost has actually declined. Provision for NPA is down to a little under 1,280 crores, which compares to about 1,586 crore in the previous quarter. Looks like there might have been reduction in slippages, because as it is, if you take a look, the previous quarter, the provision coverage ratio is at 91.5%, which includes all the technical provision coverage as well. So in terms of slippages, it might have been lower than what the street was anticipating. Again, Phillip Capital was expecting the net slippage. The net is the net of same account recovery in that quarter, that to be around 4,000 crore versus 3,200 crore in the previous quarter. So it looks like the slippage number might have been on the lower side. Asset quality was expected to improve. Again, Phillip Capital was expecting 2.9% gross NPA ratio. It has come in at 2.78%. So far a much better improvement that you are seeing overall on the asset quality, while the loan growth momentum, that surprised positively.
What's the loan growth number? You said 17% year on year.
17% year on year and about 4.5% on a sequential basis.
But something has caused the stock to slip. Pull up that intraday chart of State Bank of India. The stock has suddenly declined. It was reacting initially as the numbers were pouring in. But, you know, let's get that chart up for you. There you have it. The stock took a U-turn and is now down close to about 0.5%. And nothing in the numbers that we have so far appears to suggest a miss compared to...
Small miss on the operating profit. Small miss. It might not be a huge miss. The OPEX has increased by 27.3% YOY and about 22.3% sequentially. So Kotak Securities was working with operating profit growth of more than 25%. It's a little under 25%, coming in at 24.9%, but no taking away from the fact that provisions are good, the ROA is absolutely fantastic, and asset quality has improved.
But you know, bank stocks don't react that much to the operating profit number and a slight miss there when all the other parameters are looking up, right?
It does explain where the treasury losses are there or not. So in this quarter, if you take a look across banking sector, private banks, many of them have reported treasury losses. Well, that's not been the case for PSU Bank. So operating profit, you'll have have to see it on the context that, overall...
The rest of the PSU banks have
rest
actually
of the PSU banks have shown good numbers.
some good numbers.
Okay, the provisions have also declined on a YoY and a quarter-on-quarter basis. And we do have Hemang Jani, the retail equity strategist, and Motilal Oswal Financial Services to give us his take on SBI's fourth quarter earnings. Hemang, good afternoon. Thank you for joining us. Your take looks like a beat on all parameters. How did the numbers look like for you?
So thanks for having me. So when you look at the overall performance this quarter, NII, EBITDA, PAT, asset quality, I think compared to MOSL expectations as well as the Bloomberg expectations, there is a significant beat, particularly at the net profit level. NII level, the beat is smaller, but EBITDA and PAT level, the beat is much more than what the expectations were. Even the overall loan growth at about 16% is in line with expectations. The only reason why you would see a bit of a negative reaction post numbers is because the banks have been a little crowded trade, so you might see a certain amount of profit booking, which is what we saw when other banks also announced numbers. But purely on numbers, I think definitely there is some amount of surprise when it comes to net profit.
Hemang, what was the pre-positioning in the stock price in State Bank of India prior to the numbers?
So EBITDA number was about in our preview we had put out 26,922.
Pre-positioning in terms of pre-positioning in terms of whether a lot of retail or smart money were there excessively long on State Bank of India, which is why we are seeing the decline in the stock price despite seemingly good numbers. Was there a lot of long build-up?
Absolutely. I think if you see the banking, there was a preview also mentioned that banking and auto were the two sectors where there is going to be much better performance. And people were overweight on banks, and even on the F&O side, you can see that the positioning was on the longer side from HNI and retail. So that is why I'm saying that it was a bit of crowded trade, and which is why you are seeing a bit of a negative reaction. Even in case of BOB, we saw that. So I think that could play a role. But once we have a little bit more clarity post the con call, and depending upon the upgrades, you might see some stability coming back into the stock.
Hemang, what would your top pick be in the banking space? Because we've been pointing out how most of the banks have reported good set of numbers. Still a good time to buy some of these?
We do like, some of the PSU banks. So SBI and Bob are our top picks in the PSU, and Axis Bank definitely is something that we've been liking, along with ICICI within the private banking space.
Do stay on, Hemang. Any more numbers, Abhishek?
No, it looks like a good set of numbers. Okay. Now, the street reaction, that can vary depending on the positioning that they have. But strong set of numbers. The loan growth has actually surprised on the positive side because the street was anticipating, or analysts were anticipating, that there will be, decline in their market share. But it looks like a strong set of numbers that you are seeing on the loan growth. X of just the, cost to income ratio, that's increased sharply, which is now at 54.7% when compared to 49.2%. So the OPEX part is where the miss has come in terms of the numbers, but no taking away a strong set of numbers on the business momentum as well as the PNL momentum from the NII as well as the PAT perspective.
Okay, so good set of numbers here. In fact, we also have with us Prakash Diwan to talk about SBI's fourth quarter earnings. Prakash, good afternoon. Thank you for joining us. You heard Abhishek. It's a stellar set. Anything that stood out for you? What do you make of SBI from here on?
No, so I think the first thing that you take away from this is that in spite of such a strong, such a sizable balance sheet, they've still been able to clock well on all the metrics, particularly the growth, side. I think if this continues, there is no reason why we should be worried about banks. If large banks can do this and carry forward this weight, in terms of expansion on all counts, there's no reason to worry about the sector as a whole. I think SBI is the bellwether, and they've kind of shown the way in terms of both the clearing of all the bad assets in the past and now the kind of growth that they're clocking. So very, very impressive numbers.
The question is, who do you go with, Prakash? because all the banks have reported good numbers. Abhishek just told us that for State Bank of India, the loan growth is 17%. For Bank of Baroda, it was the best in 14 quarters at 16.3%. I was just checking what Abhishek had sent on ICICI Bank. The advances growth was about 18.7%. Even on Axis Bank, just trying to get the number over there, but even Axis Bank's, I'm presuming the loan growth would have been a strong number. So how do you pick when across the board the industry itself has done very well, and these are all big boys?
Well, absolutely. So that's what I said. You don't, first and foremost, you don't need to be worried about the sector now. And within the sector, it's going to be like creating a basket of some of the larger banks and probably just a few small mid-sized banks, because at different points in time, depending on the underlying sector growth, the banks will tend to kind of, be able to maintain credit growth at decent margins. So, we also have seen in the past, credit growth does come at times at the cost of margins and asset quality. So you will have to pick and choose depending on which banks offer you growth plus assure you of quality. And from that perspective, the processes followed by an SBI or probably an Axis stand out far better than some of the other banks like BOB and all, which have reported great numbers, but whether they can maintain this without compromising on quality is a question. So I think if you filter it to a second or third order, then you'll probably be able to get the answer. And I think SBI definitely stands out as one of the picks. I would look at Axis given the delta from where they are and where they can move, given the opportunity of the Citibank integration and all. So quite promising in that sense. Whereas ICICI probably will do a steady state growth, but it's probably priced in. Also, it's an expensive valuation. So you'll get your answer in second and third order filtering. Maybe not the first one.
Okay, we have some numbers coming in from State Bank of India. So it looks like the overall slippage. Now, in this slippage, there are two numbers again, fresh slippage and the gross slippage. So I'll continue with both. Let me first read out the numbers. Annual slippage is at 18,421 crore. So if you take this as the fresh slippage in FY23, then for the quarter, the fresh slippage works out to 3,184 crore. Now, if you take this as the gross slippage, then the slippage for the quarter works out to 2,656 crore. Both ways, the slippage is far lower than what the street had or the analyst had anticipated. So, for reference, again, Phillip Capital had expected slippages to be around 4,000 crore. So, both these numbers, 2,656 or 3,184, so anywhere between 2,600 to 3,200 crore is the quarterly slippage that you have to look. Another good number is that recovery plus upgrade for the year is at 16,258 crore. If you deduct the 9 months number from there, the recovery is at 4,470 crore. Recovery is higher than the slippage, whichever slippage number you tend to take, and 4,470 crores compares to less than 1,650 crore in the previous quarter. So in this quarter, they have had a recovery of 4,470 crores, which compares to 1,643 crore in the previous quarter. So slippages are lower than what the street had anticipated, and recovery and upgrades are better than slippages, which is a good sign.
But Abhishek, in Q3 also the slippages were about 3,200 crore.
So I've compared both. I've compared both. I've taken this number, this annual number that Lata has sent is 16,258 crores of recovery plus upgrade and 18,421 crore of annual slippage. I've taken both. The number that you mentioned, 3,200 crore. If you take the last 3 months, last 3 quarters, 10,115 crore to then 2,441 crore, then 3,209 crore. So the balance is about 2,656 crore.
No, I meant that it's not a meaningful improvement in the slippages, right? Or a reduction.
No. I'll tell you, it's a meaningful, but we have to see whether it is fresh slippage or the gross slippage. That we don't know. We don't have a clarity as of now. Even if you take it as fresh slippages, it is an improvement over there, about 3,184 crore when compared to 3,098 crore. Doesn't matter. 100 crore for a balance sheet of SBI actually doesn't matter. So, and you have recovery and upgrades which are, outpacing your slippages. So the net slippage is actually on the negative side for SBI.
Okay, so that point is well taken. Let's take that forward. Mayank Agarwal of InCred is also joining us now. Mayank, you heard Abhishek. Recovery number is higher than slippages. Slippages anywhere between 2,600 to 3,200 crore rupees, depending on whether it's gross or the otherwise way. What is your take on this one? SBI's numbers and the numbers that we just got in slippages and recovery. Yes, please go ahead, Mayank.
Yeah, thanks.
Mayank, I think we've got you on a patchy line. We'll try to reconnect with you because we are not able to hear you properly. But the sum and substance right now, if you've just joined in, SBI's numbers have been better than street estimates. We have a loan growth coming at 17%, higher than Midcap expectation of around 15.8% growth. The net profit is higher than street estimates. Gross NPAs, they have improved on a sequential basis. Slippages at 18,421 crore rupees. This is for FY23. On a quarterly basis, depending on whether it's gross or net, it's between 2,600 to 3,200 crore rupees, and recoveries have been higher than slippages this time around at around 4,400 crore rupees. So looks like a good set. The stock though has come off from the highs of the day, but yes, good set of numbers. Maybe the positioning is something that really mattered this time.
Okay, let's get in some more answers from Hemang Jani, who's waiting by from Motilal Oswal. Hemang, the question is, do these numbers have enough in themselves to result in EPS upgrades? For the last many quarters, banks have been reporting solid numbers and they've beaten estimates. And there were EPS upgrades. But this quarter, the street was anticipating strong numbers. It was a crowded trade. Most investors were long on banks. So in that sense, we haven't seen very large EPS upgrades. If they have been, it's been very minor, maybe just about 1 to 2%. Your thoughts on the EPS upgrade cycle for banks from here on? Is the best behind us in terms of upgrades?
So, Rima, overall, we think that given the momentum that you're seeing on the credit growth and a much better asset quality, the only area where there can be some amount of disappointment is the margins of the spreads because of the way the interest rates have moved, and depending upon what kind of portfolio they're sitting on when it comes to bonds. So I think overall there is going to be some upgrade given the momentum and the base that SBI has. But yes, because of the way the entire banking sector has remained so strong and is contributing to large part of the earnings, and most of the investors are positioned with a slightly overweight position. So that is why you are seeing a bit of an underperformance. But I do not think there is going to be a significant correction in the stock. At best, it could be a little bit of consolidation, but post management con call, we would have slightly more color on the kind of upgrades that one can expect.
Okay. Thank you, Hemang, for that. In fact, we still have with us Mayank Agarwal, who's joining us back. Mayank, what's your take on SBI's numbers? What's your rating and the target price?
Yes, thanks. So I think Abhishek has clearly mentioned that their recoveries will be negative. We have a strong buy on SBI with a target price of 800. So our take is that SBI would continue to perform well on margin in comparison to other private peers because of the lower CD ratio which it has. And second, we are just waiting for another number which is ACL provisioning which the bank would be required. So other banks have given a number of 1 to 1.5% like Bank of Baroda. But we think that for SBI it would be much lesser number because they have not been for any kind of merger for the other bank. So for SBI we are very positive because of consistent margin trajectory going ahead.
Okay, so Abhishek, in terms of the press conferences at 2:30 p.m., what would be the key things you will watch? One, of course, is the ECL provision. Bank of Baroda did 1 to 1.5%. So is the street expecting...
Canara Bank has
done 5%.
4 to 5%.
5%, yeah.
4 to 5% is an exaggerated level to actually look into. But 1.5% is a okay number, digestible number, because
so that's
that
one.
will impact.
What else will the street watch?
See, deposit growth has surprised positively. I mean, loan growth, okay, we can say that the EMI proportion might have changed, more of interest coming in, less of principal. I'll take that. But you cannot take away the fact that on a sequential basis, the system has seen about 3% kind of a deposit growth, and SBI is growing at 5%. So a 3 to 4% is where the system has grown, and SBI is growing at 5% on deposit. Deposit is a key material. We have seen banks increase their deposit rates over the last 2 quarters, or let's say from November to March, you have seen banks getting aggressive on the deposit rates as well. So despite SBI increasing much of deposit rate, and they are able to improve the net interest margin, that's a standard point. Then they are able to grow the deposit at this pace. They are growing at 5% quarter on quarter. You have enough liabilities, enough resources for future growth or to sustain the current growth as well. That augurs really well.
Okay, those will be some things that we will watch out for. We don't have the net interest margin number yet, right?
But it might have expanded because 4.6% is your loan growth, and your net interest income growth is 6.4% on a sequential basis. So about roughly 15-20 basis point is the kind of net interest margin improvement.
Okay, all right. Abhishek, thank you so much for getting us that analysis. That's on SBI's numbers. Mayank and Hemang, also thank you so much for joining us today. Prakash, do stay